Well, guys, the day is not over yet, but the market is down significantly. We see the NASDAQ down 1.27, the Dow 1.4, S&P down 1.2, and it's been steadily getting worse. Why? Well, everybody's blaming Trump and these tariffs. Maybe so. Because remember, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. So the short run vote is that things are scary because of Trump and these tariffs. Maybe so. The market had a really strong week last week. Markets were up a ton, all-time highs, right and left. People were high-fiving, getting excited. Is this the start of a new bull market? Maybe. What would have to happen for that to be the case? Because remember, if you're new to this channel, I talk about valuations because valuations are what drives the long-term value in the market. And right now, we're at scary times in valuations. How scary? Well, the new market, S&P 500, all-time high is 113% overvalued. Guys, keep in mind, we've been 115% before. This is pretty high. The 10-year cyclically adjusted PE ratio, 116% overvalued. So any way you cut it, we're at really high levels. Now, keep in mind, I do think that we should justify higher valuations today than 100 years ago. How much higher? 100% higher? I don't know about that. Remember, a great story at the wrong price becomes a bad investment. And right now with the market and where it's at, it's a little bit scary out there because it's basically pricing in perfection. Now you might sit there and say, well, I don't price these things. I just see stocks going up and down. If that's the case, I don't blame you. I used to be the same way. Stick with the channel. I will teach you that every investment is the present value of all the cash flow it will receive. So you're going to sit there and learn the fundamentals of investing. All the other stuff is just noise. We talk about Iran, we talk about Israel, we talk about all these things. Guys, let's look back at history. How many bad things happened? We had presidential assassination, terrorist attempts, terrorist attacks. We had, recessions. We had Great Depression. We had all these things that have happened. And guess what? Things got better because in the long run, the U.S. is still a growing economy and a growing machine. In the short run right now, valuations are very high. And guys, fundamentally speaking, what happens? When you pay more for something, you make less return. When you pay less, you make more return. So what's in the big slate this week? Well, last week was also interest rates. People attacking Powell like crazy. He's terrible. No, he's doing a great job in my opinion. Would people like to have lower rates? Sure. But do you want what's right now or what's right for the future? Because what's amazing is people always want what's great today. And then later on, when it doesn't work out, they blame others. Powell's doing the right thing today. He's being slow about cutting rates. I don't think he should cut rates at all. We have a strong economy. We have low unemployment, 4.2%. We have growing GDP. Actually, this last quarter was actually a decrease in GDP. That was a direct response to tariffs. Guys, next week starts earnings week because remember, the quarter ended June 30th, so now companies are starting to report that second quarter. Remember, we like looking at these numbers, but we don't make our investing decisions based on short-term results. Anything can happen. You will look at any company in history, they missed and they beat on any given quarter, any given year. What's important to understand is where is that company going in the future? I always like to think of it very simply. Is this company going to be larger or smaller in 20 or 30 years? Is it going to be around in 20 or 30 years? If the answer to those questions are yes, then what is the appropriate price to pay that gives me an adequate return on the money I'm investing? It sounds simple, and it is simple. It's not easy. But we're here trying to teach investing and make it easier to understand. The hard part's in here. That's the stomach. Because when things are going down, you got to be okay buying. It's a hard thing to do. But just remember, all the things you love, go look at the charts of the last few years. All the stocks you love. We talk about the Magnificent Seven. Magnificent Seven, we always said, they're crushing the market, and when they go down, they're going to do worse in the market, and that's been proven time and time again. In fact, I created my own Magnificent Seven to go against the regular Magnificent Seven for the foreseeable future. It's a fun thing to do. We do it on our main channel, so if you ever see it, make sure you click on that video. So guys, all I can ask you to do here is do me a quick favor. If you're interested in learning about principle-driven investing, click the link below. It's a foundation to how we think about investing, and it's important for you to get on that foundation when understanding any sort of investment you make. Click on it. We'll send you a free PDF, completely free, no obligation, to your email in a matter of minutes. You're going to absolutely love it. And also subscribe to the channel. Thank you for your time.